In this video, we'll compare VAT versus sales tax, tax rates, government requirements, and which country's system is more complex. In the United Kingdom, accountants work within a fully centralized tax system led by HMRC and Companies House. The UK uses VAT, not sales tax, and most compliance is handled at the national level. VAT stands for Value Added Tax, which is applied to most goods and services. Accountants in the UK are tasked with ensuring full VAT compliance, and their responsibilities include VAT registration once a company's turnover exceeds £90,000. They must also prepare and file making tax digital VAT returns accurately and on time. Applying the correct VAT rates is crucial, and accountants need to be aware of the different rates that apply: the standard rate of 20%, a reduced rate of 5%, and zero-rated items which are taxed at 0%. Maintaining digital VAT records is essential for compliance, ensuring that all transactions are properly documented and easily accessible for audits. Furthermore, accountants have to handle various VAT schemes such as the flat rate scheme, cash accounting, and the construction reverse charge. When it comes to government compliance, UK accountants also handle filings for both HMRC and Companies House. They need to prepare corporation tax returns, known as CT 600. The corporate tax rate is generally 19% for profits up to £50,000 and can rise to 25% for profits over £250,000. Additionally, accountants must file annual accounts and submit a confirmation statement every 12 months. In contrast, accounting responsibilities in the United States are much more complex due to the decentralized nature of its tax system. America does not use VAT. Instead, every state has its own tax laws, rates, and filing systems which can vary widely from one state to another. For accountants in the USA, sales tax exists at the state, county, and city levels. This means accountants must manage compliance across all these varying jurisdictions. They are required to register their business for sales tax in each state where they conduct taxable sales. Applying the correct tax rates can be quite complicated, as rates can differ significantly. Each state may require accountants to file separate sales tax returns, which adds to the paperwork and administrative burdens. Additionally, accountants may need to handle state audits, which can be both time-consuming and stressful. At the federal level, they need to prepare tax filings for the IRS, America's tax authority. The corporate tax rate is a flat 21%, while individual federal tax rates can range from 10% to 37% depending on income levels. Accountants are responsible for filing various IRS forms, including Form 1120 for C corporations, Form 1120S for S corporations, Form 1065 for partnerships, and Schedule C for sole proprietors. Payroll taxes also add to the responsibilities of accountants in the USA. In simple words, UK accountants deal with one cohesive national tax system, whereas USA accountants manage multiple state taxes. If you found this comparison helpful, hit the like button and subscribe for more accounting and finance tutorials. Thank you for watching.